grocery-anchored space, and supermarkets, when you look at restaurants, when you look at convenience retail, when you look at discount apparel, they need to be in physical locations for the most part. They're seeing strong underlying demand that I think will exceed most people's expectations. And most importantly, new supply in that sector is down 90% from 2006 levels. Select service hotels, a business that in this part of the lodging cycle is delivering nice growth in cash flows. You can finance nicely and generate very favorable cash-on-cash returns. We like low CapEx businesses where we as owners of the properties can get nice free cash flow. Sovereign wealth funds, a couple of things that I think will impact real estate as you think about investing over time. This is not a transitory thing that's happening. Sovereign wealth funds, which today are $5.5 trillion, will continue to grow. They've grown 65% and estimated since 2007. They look at a world where they can get less than 3% on long bonds and can get 5-6% unleveraged returns on real estate initial yields with potential growth in cash flow and an inflation hedge. I think their desire to own high-quality real estate in the best markets around the world will continue to grow. It's harder in the U.S. because of our tax laws, but you'll still see more investment here. I think it's a major trend and very supportive of the biggest and best real estate out there, similar to what many of the public companies own. And then REITs, the reason for this conference. I'm in the camp of a very bright future for public real estate. I think public real estate will continue to get a larger slice of the pie. The business that Sam Zell and Bill Cooper really created 20 plus years ago, I think will continue to grow both here in the U.S. and around the world. I think investors will continue to like the dividends paid by this sector, particularly with aging populations, need for fixed income. Debt capital, when you look at it, as banks shrink their balance sheets, who can issue debt directly to bondholders? It's public companies, and they'll find themselves, as they do today, with the lowest cost of capital in the real estate business, which will allow them to acquire more. In Europe, as they recapitalize over-leveraged real estate in Europe, I think you'll see more and more public real estate. We've got some big platforms in logistics and retail that likely will find their way to the public market over time. And the emerging markets, where traditionally public real estate companies have been developing companies or family businesses. If you look out over 5, 10, 15, 20 years, there's going to be very large stocks in places like Beijing of income-producing real estate that public market investors around the world are going to want to own. I think you'll see more publicly traded real estate in those parts of the world as well. For us at Blackstone, we brought a number of companies public. We'll bring more companies public, I would guess, over the next couple of years. We're very focused on governance. We're focused on transparency. We're focused on having a terrific management team. And we're focused on delivering for public shareholders. We want the investors in these companies to do well because we plan to bring other companies in the future. It's a virtuous cycle for us. So we're committed to building great companies that hopefully the market responds positively.